Good evening, and welcome to this session of the live virtual classes conducted by the Board of Studies Academics of the Institute of Chartered Accountants of India. In the last class, we began accounting or accounts of companies, and we did make good progress. We completed the first section in this chapter, which is section 128, right? Then we got into the financial statement definition, right? I think we had to stop there due to certain unavoidable reasons. So we'll continue from here. So we are now in section 129, technically. But before that, we need to know what is the financial statement. Definition, section 2, subsection 40. Now, as I was explaining, the other day, I hope today my voice is clear, that I'm audible to all of you and all that. So having said that, so we have financial statement is not a definition, it is a bundle. This is a bundle. Okay. Thank you, Ji. It begins with the balance sheet, which is on the top. See, the balance sheet is the topmost document. Okay. And beneath the balance sheet, you have the annexures. So the balance sheet is in fact, from another perspective, as an auditing professional, as an assurance professional, when later on in your life, when you sign the financial statement, you are actually signing the balance sheet only. You are signing the balance sheet, which is supported by the profit and loss account, the cash flow statement, the annexures, the explanatory notes and all that. So in other words, the balance sheet, the first annexure is the profit and loss account. Then you have the notes and then the cash flow statement. Of course, in the first, before the notes begin, you will have the statement of changes of equity if applicable, meaning they will begin with the opening equity, both equity and preference, and then see what changes have happened. Maybe shares were issued or share capital was added, rights issue, bonus, blah, blah. And of course, buyback, etc., redemption, etc. So that the changes in equity is shown separately. Okay. Also, there are huge explanatory notes annexed to and forming part of balance sheet. I have highlighted the word annexed here because there are two verbs that are being used with respect to financial statements. Two verbs. Okay, one verb is attach, to attach. The other is to annex. So if you have the noun form, you can say attachment and annexure. So what is an annexure? What is an attachment? We should understand. Anything that is part and parcel of the balance sheet set is an annexure. Anything that is part and parcel of the balance sheet set. So the entire financial statement, other than balance sheet, everything is an annexure. P&L, statement of changes, and of course, the notes are annexed. Okay. Whereas, for your information, the board of directors report is attached. The board directors report is attached. The auditor statement is attached. Of course, the auditor statement gives the opinion on this financial statement, right? It is attached. So next time when you're looking at any accounting standard or financial reporting rule, see if that document is to be annexed or to be attached. It is just an attachment. It is not forming part and parcel of the balance sheet. But believe me, most of the accounting standards will want you to annex. Reason, those documents or those part of the financial statement which are annexed to the balance sheet. So everything is to the balance sheet. Remember, the balance sheet is at the core. On that, we have the attachments, the director's report, the auditor's report, etc. Then the balance sheet. Then the annexures, the P&L. Law. Now remember, when you as an auditor sign the balance sheet, you are automatically certifying everything below it, every document annexed to the balance sheet. Your opinion extends to every document annexed to the balance sheet. So very important point, not only from your law perspective, but also from your auditing perspective. So be careful because so you have every right to tell them that if you do not change this, I will qualify. What they say in the board of directors report, you cannot do anything. But what they are going to put in the notes, you can talk, because, or else you can say, if you do not put the notes in this way, if you do not disclose it the way I feel it should be disclosed, then I will qualify in my auditor's report and state that this is what it is. There you get the opportunity to see. Ultimately, the recipient, the receiver of this set is the shareholder, basically. So we have to, our audience is the shareholder. So we should ensure that what is stated herein is clear to him, has some meaning for him. So that seems to be the goal of the exercise. Now, just for your information, the cash flow statement, okay, accounting standard 3, I'm sure all of you are too familiar with it that I need not here dilate on it, except to say that this cash flow statement, which is an important annexure to the financial statement, need not be provided for an OPC, one-person company, a small company, a dormant company, and a private startup company. Dormant company is not in your syllabus. Don't worry about it. It is basically a company which is in existence, but which is not functioning, which has announced itself as dysfunctional. It has proved to the ministry, right, registrar, that no activities. So it has been put in hibernation, sleep, deep sleep. Okay. And then later on, we can always, in those, I don't know if you read some of the space movie, maybe you watched an old movie called Alien, or maybe Space Odyssey, 2001, a Space Odyssey, where they will get into these pods and they'll go to sleep. So that's what billions of years, as the spaceship goes through space and it reaches, it'll take a long time. Then they wake up. Maybe Interstellar, if you've seen, you would have seen that. Now, the point here is, similarly, the dormant company goes to sleep. Then once it is ready, it can again be brought back to life. It means brought back to activity. It is not dead. It is sleep. Private startup company. Startup company, you and I cannot say that is a startup company. It is the ministry that decides, not our Ministry of Corporate Affairs, the Ministry of Industry. They have a clear-cut license for a startup, which startup has to prove itself and get itself recognized. Only then it can get the benefits under the Companies Act, under the Income Tax Act and all that. Then again, it has to make an application under the Income Tax Act. It is not automatic. Unfortunately, many engineers who begin startup companies, they automatically assume that they get all these exemptions and all that. It's not. Everything has to be again reviewed by the government. And even if your company has been recognized as a startup company, the government may not give it the deduction. They may not allow them to claim the exemption from profit and all that. Right. Just for information. And again, here they are talking about private startup company. So such a company need not give. But believe me, a startup company will have no cash flow. What is the need for statement? Whatever came in, they would have spent, they would have taken home a salary. Finally, again, they'll go for new funding, keep on giving all sorts of bloated, boosted valuation figures and all hype. So this is the basic history of 98% of the startup companies, with that rare flash in the pan exception that makes all these people come and fall into the trap. So we've already seen this, and I've already said that notes are annexed to or forming part of such financial statement. So just for your information, just for your memory, any document annexed forms part of the balance sheet, and your audit opinion extends to that. Anything which is attached is not covered by your auditor's report. Now we come to the section per se. Now here we have a very, very fantastic thing. 129.1. They begin by saying the financial statement should disclose the true and fair view of the state of affairs of the company or companies. Now, in other words, earlier, true and fair was our responsibility as auditors. Because as if you and I were only worried about true and fair, and that the companies, including our own fellow brother in that company as a CFO, need not bother about true and fair. The directors need not bother about true and fair. It was only the auditor who was jumping up and down, saying true and fair view, true and fair view. So now they say, look here, Baba, you also should ensure, before you give it for audit itself, to see to it that the accounts are revealing a true and fair view. So that tomorrow if that guy is qualifying, it should go beyond your own. So that it should be so obvious that it is true and fair that you should be able to argue that it is not true and fair. Simple, sir. I gave you an earlier example. I don't know how many of you remember the example I gave. The example was allotment of bonus shares out of revaluation reserve. I also told that for a long time in the history of corporate law, there was no clarity under the Companies Act. Thereby, directors were still almost 1997, which may be very old for you, old last century, but for me, it was in sort of the beginning stages of my career as a practicing CA, starting stage when when I used to audit companies and all that. I used to insist that you can't allot shares out of revaluation. So because I was very adamant about it. That's principal issue. The reason is different. It is not even a principle. It is basic accounting, boss. That revaluation reserve cannot be taken out of the balance sheet. The only way it can go out of balance sheet is to the P&L account. The only way it can go is by reducing it from the increased value of the fixed assets. So if you have purchased fixed assets, if you have revalued fixed assets, 100 rupee worth, you have increased it to 200, okay, 300. The difference 200 hai revaluation reserve, right? Now this 200 will be appearing on the liability side of the balance sheet, correct? On the asset side, you will have 300, right? Now this 300 sets consist of 100 rupees original fixed asset and 200 rupees revaluation reserve, hai na? So this is the 300. So when you're charging depreciation, on that 100, you are charged, say 20 rupees, then on 100, you will take 20 to P&L. On the 200 portion, there you will take 40, you can take it to P&L. You will reduce it from the revaluation reserve. So that the asset value will come down from 300 to 240. And the revaluation reserve will now be 160. And the profit would be reduced by 20 to the extent of the normal depreciation. This is the accounting treatment. This is the correct accounting treatment. Another 200 years down the line, even if 200 years later somebody comes and writes double entry system of bookkeeping, brothers and sisters, this is how it has to be done, because that is when the balance sheet will tally. Otherwise, the balance sheet will not tally. If you allot bonus issue, in a way, what you're doing now, this 300 is going to, the 200 is not going to go out of your balance sheet, whereas there would be depreciation. The rare example is land, where in the case of land, you have a point. Land, there is no depreciation, therefore it will be there. But still, by this principle itself, we should understand that the revaluation reserve should not be touched. No, this was an esoteric argument put forth by professionals like me to directors and CFOs of companies till 97. But in 90s, so what happened when they, ignoring our suggestion, we used to allot bonus shares, in which case I would say true and fair view is affected and I will qualify. Whereas for them, there is no true and fair view. They need not abide by true and fair view. For them, whatever the 2 plus 2 equal to 5 means 2 plus 2 equal to 5. Even our own brother in CFO there will say 2 plus 2 equal to 5. We have to ask him, brother, we both studied the same syllabus, yeah. How can you say 2 plus 2 equal to 5, yeah? It is 4, yeah. Like that, we have to tell. Even then, he'll say, no, Mr. Srikanth, I think you are not able to understand the correct. I'm not able to understand anything. It's okay. But today, clearly, SEBI came in 97 and put their foot down and said, look here, why are you doing all this nonsense? Because you want to allot promoters' contribution shares to your promoters. And the profit is not there. Somehow you want to satisfy your boss. So you are saying revaluation reserve, we will allot. SEBI said, no way. Promoters' contribution shares cannot come out of revaluation reserve. That happened 97. Thereafter, 99, not 2014, 13, 99, MC and the ministry woke up. At that time, department, it woke up. And it said, yes, we will amend the Companies Act. So they also amended and said, look here, you have to ensure that revaluation reserve, free reserve, they redefined it. And they took revaluation reserve out and said no bonus shares out of revaluation. Of course, now in 2013, very clearly, they have said no bonus shares out of revaluation reserve. But by this 120, see, why I'm giving this elaborate history of law is to make you understand how our institute is way ahead in terms of accounting. We are ignored and they will go on and do something. And then we have to be very clear. What is true and fair? Now, the onus, the burden, the responsibility of ensuring true and fair view has been shifted to the directors. And of course, the CFO who is entrusted, basically directors. So it's a very good move by the Parliament to do this, and we should appreciate it. Okay. So also the balance sheet should be in the form provided in Schedule 3. Okay. And format of Schedule 3 is there, I'm sure you're all familiar. And the financial statements of every financial year shall be laid before the meeting. That is the technical term we use. We don't use the word presented. We say laid before the meeting at every annual general meeting by the board. So the board of directors has to prepare the financial statements from the accounts, hopefully, not from their imagination. And then those accounts should provide a true and fair view, and that should be presented in Schedule 3 format. Right, sir? Okay, a small suggestion. Maybe you might like it, you may not like it, but maybe you may not have the time. But my suggestion is you should create the time to read at least 5 listed company financial statements. Don't try to mug up or don't try to study. In the light of your auditing, accounting, and law paper, now, these knowledge is acquired by you now. Based on that, even whether you understand or not, start from the balance sheet portion. Okay. If you want to study for auditing, then start from the auditing portion itself. For law portion, what you do, you take from the balance sheet and quickly go through page by page. Just glance at it. Keep a notebook with you. Any question you have, you raise it. You make it. And then go to AI and ask that question. So that's how you use artificial intelligence. Go to Perplexity or go to Gemini and ask that question. Why is it like this? It will give an answer. Beautifully, Gemini will give an answer. Okay. And slowly, after the third balance sheet, believe me, brother or sister, you will become authority in financial reporting. Believe me when I say this. Because you're practical. Thereafter, your theory will help you. Okay. So this is my suggestion to you. May not like it, but that's okay. If you like it, please do it. I have done it, and because of which my depth of these subjects became greater. And when I went to the exam, I was not writing from mug-up. I was writing from practical knowledge. My answers weren't mug-up answers. My answers were like, hey, this is what it is, man. A professional writing, different from a student writing. So that profession, which if you check up your institute syllabus, you'll find level of knowledge, they'll say professional. What do they mean by that? Going beyond what exams, here your knowledge expectation is professional. You should be able to give authoritative view. For that, your depth of knowledge should be greater. And it is not done by merely reading the institute material alone. I repeat, it is not acquired by merely reading the institute material alone. Institute material is extremely well researched and one of the best. The best, or should I say one of the best? The best. You don't need any other textbook. Our institute material is more than enough. But what I am telling, if you do, you will become even more knowledgeable. That is all I'm trying to say. Okay. My suggestion to you, if you have time, do it. If your exams are nearing, may not be possible, but if you have the luxury of another 1.5 years before you actually write your exam, by all means use this opportunity to go through 5 or 6 listed company. For example, you take good balance sheets like, say, Ashok Leyland Limited. Simple ones. They are all simple balance sheets. Don't go for conglomerate balance sheets initially. Dabur, something like that, which are all simple businesses, straightforward balance sheets. There is nothing, the business is not complicated. Don't go to L&T or ITC conglomerate. L&T, very complex business. You need to understand EPC and construction before you can even read that balance sheet. So later on, if you're employed in L&T, yes, L&T balance sheet will become, or if you're employed in the EPC industry, then L&T will be, Larsen & Toubro will be the benchmark balance sheet for you to read and understand. Okay, humble suggestion. Okay, financial year means the period ending on the 31st day of March every year. Very interesting. We moved to a concept of uniform financial year, which begins on the first day of April and ends on the 31st day of March, subsequent year. Where a company is incorporated on or after the first day of January of a year, Financial year is a period ending on 31st day of March of the following year. Okay. See, the concept is very simple, sir. Suppose a company is incorporated on 1st of June 2026. Okay, 1st of April 2026. No problem at all. 31st March 2027. 1st of June 2026. 31st March 2027. Got it. 1st of November 2026. 31st March 2027. 1st of December 2026, 31st March 2027. Be careful. 1st of January 2027. It is not 31st March 27, sirs. It go to 31st March 28. Or a company which is incorporated on, say, 15th of January 2026, it will not end its first financial year on 31st March 26. It will move to 31st March of the following year. Okay, that is the 3 months point. 1/4 onwards, there is nothing. After 1/4, it is automatically next year only. The point is those 3 months which come before 31st March of the current year, for those months also, the financial year will end on the 31st day of March of the following year. Okay. Suppose a company is a holding or subsidiary of a foreign company, a company incorporated outside India, and for its consolidation purpose, it has to close its year for a period which is not a year. Okay, it's not a full year. The ministry will permit them, the CG on an application may allow them to do it, because there are many companies that are subsidiaries of companies in other countries. So even for part year, they may allow the financial year, even if that period is not a year. This is given for only those cases where there are some part years in one or the case. After that, they will routine. See, in those cases, what will happen now? Such companies, subsidiaries, and especially subsidiaries of foreign companies will close the accounts 2 times in a year, or because one for their March 31st, the other for their foreign subsidiary, foreign holding company. Holding company in India will not. There you will find in consolidated financial statement, they can take nearing 6 months and they can consolidate it here. Not a problem. Okay. Abhiruchi Limited was incorporated on 11th December 2024. 11th December 2024. When should the company hold its AGM? I already told this to you. So, according to 96(1), which, friends, this is not taken in this is not taken in this chapter. This is connected to this chapter. This you would have learned it in management and administration itself. Okay. So the company's financial year will close on 31st March 2025. Now, the company may hold its first AGM by 31st December 2025. That is based on 96(1). Financial, when should it hold its AGM? 96. That is management and administration. The first AGM should be held within 9 months from the close of the first financial year. In this case, it will end on 31st March 25. No problem. Would your answer be the same if you are informed that the company was incorporated on 11th February 2025? 11th February last year. 11th February 2025. No. Your answer would be different. No? So, what will be your answer? If the company was incorporated on 11th February 2025, when will the first financial year end? Let's see. I think you're putting up answers. Wonderful. I'm so happy for you. Yes. Pawanji, I'm very happy that you're doing it. I'm so happy and proud. Maybe I'm so happy. So Dhanalakshmi is giving 31,327. See. 11th, yes. See, first financial year, na. So 9 months. Remember, it is not 6 months. For any other financial year, the AGM should be held within 6 months. But for the first financial year, it should be held within 9 months of the close. Okay, there is an exemption given to the first financial year. This is all not part of my coverage. Already covered in management and administration. It's for your information. So the correct answer is the year would end on 31st March 2026. That is correct. And the AGM, if the answer you are looking at is when should the company hold its AGM, then the AGM should be held on or before 31/12/26. That is the correct answer. I think Mr. Vijay Doshi got it right. Sridharji, you are right. But just ensure 31/3/26. That means 31/12 is the correct. 31/3/26. 31/3/26. September 26. Shushmita, maybe you are confusing 6 months, 9 months. Check it out. Okay, and so the correct answer is the year will end on 31/3/26, and the AGM should be held on or before 31/12/26. Beautiful. All of you are, most of you here who have responded are clear about about it. I'm so happy for you. Now, see, in our exam, rarely they give, I'm not saying they do not, rarely they give questions that span 2 chapters, one or more chapters. Usually questions are restricted to 1 chapter, 1 concept, but not always, not always. It is, I showed you the other day, how they have combined the General Clauses Act and, dividend. So it could happen. So you cannot say, no, like university exam or high school exam, you cannot say, no, madam, you are asking question from chapter 5, syllabus only chapter 6, madam, like that. Everything is in the syllabus. If you see the syllabus, it will be section to section. That is the syllabus. Okay. Section, I think, 1 to 148. That is the syllabus. Straight away. Okay. Companies Act, section 1 to 148. Now, another beautiful thing. The items contained in the financial statement shall be in accordance with the accounting standards. But this is not new. It has been there since, as I told you, 1999, the ministry woke up and they said, no. Company also should comply, because they sort of took ownership for the accounting standards. And that is a big story, as most of you know. Accounting standards, initially they wanted to sign off on WTO and adopt IFRS. All that happened in this period only. That 95 to 99 was a huge thing for us. We were not sure whether we should go for IFRS or whether we should stay with our own accounting standard, which is not international standard, obviously. And so much. And that was the time when active globalization and active LPG was going on. We were seeing growth. And we honestly believe that it is the foreign companies which are coming in would be our saviors, which was not the case. Ultimately, it is our own industry that grew. And today, the prosperity that we are seeing is, by and large, thanks to our own industry's capability to generate employment, though the IT sector did help, and so on and so forth. So at that time, there was a feeling that we should completely align with the global accounting standards, IFRS and all that. But somewhere, even the government of India said no, and they introduced Ind AS and all that, and which is what is now applicable, which means that we will align with international accounting principles and fraternity, but we will have our own thing, and we won't merge with IFRS as well. We also decided. So that is history and not relevant here, but it is in this background that the amendments to the Companies Act came. The amendments to the Companies Act came in this background, which means the ministry was interested in enforcing accounting standards, whether by Institute of Chartered Accountants of India or ours. And they also slowly wanted to take over the right. Later on, you'll see NAFRA will come. And that NAFRA came, they wanted to establish the authority so that we only will promulgate. So before that itself, they said companies shall comply with the accounting standards. Not because the auditor is going to come and ask you, but because it is statutory. So statutory compliance of accounting standards came as a boon to the auditing profession. Because now we could say, look here, it is not because I am saying that you will comply with the accounting standard. So the accounting standard is mandatory for you. Just check it out. So in case of a government company, accounting standard 17 shall not apply. Right, sir? Which is obviously they don't want to classify defense production and say, give information of segment-wise information about defense and all. because of obviously national security reasons. So a government company need not give information which is engaged in defense production, need not give accounting standard 17. Okay. So if the accounting standards are not in compliance with the, if the financial statements are not in compliance with the accounting standards, then there should be a disclosure in the financial statement as to the deviation and the reasons for the deviation and the financial effects, if any, of such deviation. Which is why, see, you as an auditor can say, look here, you please put it in the notes on accounts, if it is not material. But if it is material, then you might have to take a call and highlight the note and also say that I don't agree, this is what it should be, or this is the deviation, take your own call. You should also highlight it, because you owe a duty of disclosure, you owe a duty of transparency to the ultimate stakeholder, which is not only the shareholder, every person who is user of those financial statements and who incurs anything liability or whatever it is based on your audited financial statements. So certain classes of companies which are special category, which are governed by their own act, okay, need not comply with Schedule 3. For example, insurance company need not comply with 129(1) because they have their own rules. IRDA has got its own rules. I'll just show you. This is more for your general knowledge and information. Don't, it's not for exam and all, you need not study all this, but you can just have a look. See, this is IRDA regulation. IRDA, it's older one, maybe it is amended, but almost 2000, but it may not be much amended. So here they have their own notification. IRDA has given a notification which is giving how a financial statement should be prepared by a life insurance company. Yeah, how they should be disclosed. All that is given. See, by and large, they follow Schedule 3 only. But while preparing the financial statements, they will comply with this notification and not with, they will not comply with the notes for Schedule 3. They would rather go for wherever it is coming, wherever this notification is applicable, they will apply only this notification. Because they are a specialized company, and this is the auditor's financial statements and auditor's report of insurance company. So if you're auditing an insurance company, you will have to go by this only. Okay, this is just for your information and is not part of syllabus or anything. Now that you've seen with your own eyes, you will understand what it means. Banking companies under the Banking Regulation Act, RBI would give. Electricity companies, the various electricity boards will give. Any other law, if a company is governed by any other law, then there could be some disclosures by that law, which would override the Companies Act. Consolidation of financial statements is also very important. Every holding company, okay, every holding company should present a consolidated financial statements, combined financial statements, wherein the holding company and all of its subsidiaries and associated enterprises are put together, and that picture is given. So a company having one or more subsidiaries shall lay a CFS, consolidated financial statement, along with standalone financial statements. I'm sure you are all quite familiar with Accounting Standard 21, which governs this, how to consolidate. Okay. The statement containing the salient features of the financial statement of a company's subsidiary or associate company or joint venture or venture companies completely should be given in form AOC 1. Whatever principles are applicable to the standalone are applicable to the consolidated financial statements. The auditor of the holding company will certify the consolidated financial statements for which limited purpose he is entitled to ask for information pertaining to the subsidiary. For example, if the holding company is Ind AS compliant company, then its subsidiary also should get itself Ind AS compliant. If not, at least for consolidation purposes, they have to get their accounts Ind AS compliant. They have to revise it, prepare it based on of Ind AS, and then only it can be combined. It can be consolidated. It can be taken for consolidation purposes. Okay. Now, this is a interesting exemption. Try to understand it. It's not very difficult to understand. What you need to understand is, first of all, you have studied holding and subsidiary company definition, and you know that a company cannot have more than 2 levels of subsidiaries. First of all, subject to a few exceptions. Okay, like already existing 3rd level or 4th level subsidiary, and banking companies, finance companies, and all, insurance companies, and all that, whatever it is. Other than that, normal company cannot have more than 2 levels. So if you're talking about company A, such company can have two levels of subsidiaries, B and C. So it can have B and C, only 3 levels of subsidiaries. Now, so assuming that there is a company called A, which is the holding company, it has a subsidiary called B. B in turn has a subsidiary called C. Now, question whether B should consolidate C. Okay, members including those not otherwise entitled to vote do not see. So whether B should consolidate C. It's a question. You should see to it that members including those not otherwise entitled to vote do not object to the company not presenting consolidated financial statements. So B's members should not object. So you should get an NOC from the members of B. B's members should say, we have no problem if you don't present consolidated statement with C. B should not be listed on any stock exchange or in the process of listing on any stock exchange, whether in or outside India. So first condition, the members of B should agree. They should not object. Okay. Members. Second point, B should not be a listed company or in the process of being listed in India or abroad. Thirdly, its ultimate or any intermediary holding company files consolidated financial statements. So its ultimate, here see the ultimate holding company is A. So B ka ultimate, C ka ultimate is A. Now let us say that A is presenting consolidated financial statement showing B and C in it. How that will be done, you are better at it than me. C will be swallowed by B, then that swallowed B. So what happens is technically A will do the job of consolidating B. Only then the consolidated B will get consolidated with A. So anyway, B is getting consolidated, but the members of B are not going to get a consolidated financial statement wherein B and C are consolidated. Straight away, we are going to go to A. A will consolidate B and C. So 3 conditions to be satisfied. If B should avoid consolidation, first of all, members of B should not object. 2, B should not be listed or process of listing in India or abroad. 3, the ultimate holding company or its ultimate or any intermediate holding company files consolidated financial statements. So in the case of B, it's ultimate. A is the ultimate. But suppose there's the 2-level issue is not there, then C may have a subsidiary D. Now, even C can avoid the consolidation if either its ultimate A or intermediate B do not consolidate. If they consolidate, then C need not consolidate. Okay. So, but provided these 3 conditions are satisfied, then there need not be separate consolidated financial statements of B consolidated with C. Okay. Good. No, not many queries. That means you have understood it. Thank you. If you have any questions on this, you can ask me. Now, sometimes see, central government may exempt it for application of certain special kind of companies in public interest. That power is always retained by the central government, more for extraordinary situations. Okay. So motu means on its own motion, or means without anybody asking, on its own it can say you are exempted with that. May exempt from 129. For example, see, during Corona, many of these exemption privileges were taken by CG, and they said don't have to do it. You need not do this, like that. And also they used it to extend also. I'm getting queries. Yes, associate company is also consolidated in almost the same manner as a whole full subsidiary. See, basically, if you look at it, what is happening in consolidation? Two things. One, the assets of the subsidiary and the holding company are merged together. The liabilities are merged together so that they are presented together rather than as separate assets. As if for a moment we ignore the corporate wheel. If that were only so, then Srikanth would have got 100 in accounts, company account, but it is not so simple. There is another group there which is not. If you are 100% the owner, wholly owned subsidiary, no problem, because there is no minority interest. You just have to combine, square off all the common, sales and take out the profit if in any stock. It is over by and large. Whereas if there is a minority of 30%, then that 30% minority liability needs to be accurately arrived at and shown as a liability. That is all. But these two matters are the only. And once you do this, what happens? Your investment in that company, that may or may not be worth the same today for balance sheet view, not intrinsic value. Balance sheet itself, what you invested, now the balance sheet is not having. It's a loss. So that has to be written off to goodwill. Or if it is high, if that company is having more value than your investment, very good. That becomes your capital reserve for the purpose of consolidation. That's all. I'm not trying to oversimplify the topic. I'm only saying. So the same logic will be applied to associate company, except that here it is not, that company is not, we are not holding more than 51. We are holding only 20. More than 20, less than 51. That is all. Same logic. We show it in our case. That's all. Sir, let's suppose C is subsidiary of B, then C may not present CFS. 1 second. Problem. Yeah, I'll do this. C is a subsidiary of B, then C may not present CFS station companies product all the. Sir. C is subsidiary of B, sir. Subsidiary will not consolidate. Only the holding company will consolidate. So C need not consolidate at all. Are you able to understand, first of all? If you are asking, am I correct? I would humbly suggest that you understand the principles, which is which company will consolidate? The holding company. So here in your own example, what is the holding company? B. So B only has to present consolidated financial statements. C will not. And don't worry, it is not about the registrar of companies. Registrar, not register. The registrar. REGISTRAR. It's a man, registrar, a person, okay, of companies. So it is for the members of CB. The members only. See, the CFS is meant for the members. The registrar is not here to go through it. Registrar is here to only see that the members' interest is not prejudiced. The company is not conducted in a manner prejudicial to public interest. That is all registrar's job. The consolidated accounts are not meant for him, except in as much as they may reveal an unsatisfactory state of affairs as far as the company is concerned. Okay. Now coming to your point, B only will consolidate. C will not consolidate. Maybe the way I explained it, you got confused because I said C may have another subsidiary D. If so, then C also need not, I said. So our main talking is only about B. B need not consolidate with C, provided members of B do not object. B is not a listed company or in the process of being listed in India or abroad, and its ultimate holding company or any intermediate holding company is consolidating. In this case, we said A is consolidating. Okay. Beautiful, sir. Wonderful. Okay. Penalty under section 129, similar to 128. It is a focused penalty. It is like they are choosing the people who will be penalized, not all the directors, only the managing director, the whole-time director in charge of finance, CFO, officially appointed under the Companies Act, any other person charged with the board, by the board with the duty of complying with section 129. And in case the company does not have any of the above, please note it, Your Honors, no managing director, no whole-time director in charge of finance, no CFO, nobody is charged, then for the purpose of penalty, all directors can be taken. And here, they have not decriminalized. Here they have said imprisonment up to 1 year or fine, or fine. So one chance is there, as I already mentioned to you, since the word or is used, the directors who are getting into this can go for compounding. They will have to pay they can avoid a conviction. But they have to pay higher than the fine. Sometimes it is fixed at 3 times or 2 to 3 times the fine. But it is worth the paying, believe me. When you come to final, you will appreciate, I hope you will appreciate, where you will understand that to become a director, you should not be convicted with imprisonment. And to become MD, you should not be convicted at all. Okay, even if there is a conviction under Companies Act, person cannot be appointed as an MD. One of the disqualifications for going under Schedule 12. It is if you come to final, you will understand why escaping conviction is very, very important for a director. Don't get convicted. So if you go for compounding, the authority, even if it has already preferred proceedings now for prosecution, they will withdraw it. If the court is already appraised, or if they will finally that case will be marked as acquitted. They will close it. They say, sir, compounding is over. Then it will be a long-winded process. It will go to the court, one more appearance. Then this guy, the government pleader, will come and stand up and say, no, that has been compounded. Okay, what is it? Then acquitted. So that you will be acquitted. That is, acquitted means not guilty. That becomes very, very important. And compounding is possible only if the section says fine or imprisonment or fine only. Then you can go for compounding. If it is pure imprisonment or imprisonment and fine, then no question of compounding under the Companies Act. Okay, here nothing can be done. Okay, so under the CRPC, you can escape imprisonment but not fine. What you can do is go for a plea and say it's only economic offense, maybe, but even then you will be convicted. Okay, what you can do is to get out with a lesser punishment than a greater punishment. That's all. Okay. So they would like to have periodical financial statements for unlisted companies also. Okay, in the same way that listed companies have to compulsorily provide quarterly financial statements to the stock exchanges as per the listing agreement. Okay, so that the stock exchanges will straight away publish it in all the websites and all those. So any there will be an early warning signal for the company's financial position, good or bad. Okay. Recently, I took over as a treasurer of my Masonic Lodge and non-profit organization, and now I presented my first quarter accounts, which is in April to June accounts. I'm sorry, our year begin on 1st January. So January to March, first quarter accounts, I have presented it to the members. Okay, that's it. It is more of a question of transparency and being honest and straightforward. You might ask me why they have put imprisonment for financial statement, because see, the directors have taken money from the public. The promoters and the directors who are managing the company have taken shamelessly, they have taken money from the public. So they have a duty to report annually to those members. Failure to do it is as good as fraud. Failure to report is as good as fraud. Are you able to understand? The directors took 5 rupees from me. In all fairness, you will lost that 5 rupees also. You have to come and tell me about it. You can keep quiet. Okay, so that is why non-compliance with 129 is a very serious offense. I agree with this. Because after all, the whole point of going public, of the whole point of incorporating is to take money from others, OPM, other people's money. If that basic sense of responsibility is not there, then they have no business to be running businesses. This is my view. And I talk as a senior chartered accountant, and I've seen enough second generation mismanaged businesses. And I've also seen great businesses built by both first and second generations. Both sides. I'm not blaming second generation, but by and large, I've seen many good second generation, many good established businesses being destroyed by second generationists. Sometimes third. Nowadays, third is second generation destroyed. Simply come and think they know everything they will do, and arrogance, because they are born in a rich thing, arrogance. They won't listen. See, it is like I'm a financial consultant. I'm a chartered accountant. I'm an auditor. I am like Shalya. I'm driving the chariot for you. You have hired me to do it. Or maybe the CFO, let us say, you have hired me to do it. And I'm telling you, don't do this. It's not good for you. Like Karna, what you are telling, keep your mouth shut. Do what I say. If you remember the famous Mahabharata scene, you will understand. Shalya warned Karna many, many times. Don't do this. Don't do this. Because Shalya himself was an Athirada. Later on, he becomes one of the generals of the Kaurava army. Such a man is advising Karna. But Karna takes umbrage because he thinks he's being insulted because he's a charity son, whatever. So he says, you don't advise me. So Shalya says, this is the final time I will advise you. If you do not listen, I will get down and walk away. So Shalya tells him, don't go into that place. There is muddy. Your wheel will get stuck. Karna says, keep your mouth shut and drive. And the wheel gets stuck. And Shalya gets down and walks. This may sound like a mythological story, my dear friends, but this is the history of many CFO resignations. I have seen in my audited companies where the CFO will come to me and say, Mr. Srikanth, I have no other go, sir. How long I can see this company being destroyed by this gentleman? And they will resign and they will go because their advice was not taken in the correct time. Later on, that they will realize, oh my God, I should have done it. What that man told was correct. But by then, that CFO is not available in that company to run the show. Again, I will tell you, don't think that only practicing CAs are all great. Believe me, there are extraordinarily brilliant CFOs. I had the good fortune to interact with at least about 7 or 8 of them in listed and unlisted companies through my 40 years. And I've had the highest regard for their acumen, for their ability to see the larger picture, for their ability to be with the management when the need arose. And I think such CFOs are also needed in our profession. Let us not think that only practicing CAs. We are partners in the same activity of helping businesses to be compliant and moving forward with prosperity and wealth generation. So, in the member as a partner rather than as an enemy. Practicing member also should look at the CFO as a partner rather than as an enemy or some criminal who is we are here to find fault with them like that. Now, so this periodical financial statement is a good idea. Nothing has happened as of now. They may suddenly make it compulsory, in which case the format, etc., we have to do it. Now, very interesting. This part has been tested frequently. Questions have come here. Okay. On a very, very simple point, if you remember that 2 marks in the exam, easy. Just this one slide, you remember 2 marks in the exam. Okay. This is called authentication of financial statements. Authentication means certifying, signing, authenticate. So physical signing, today digital sign is allowed. Okay. Though for sentimental reasons, many managements would like to still go through that formality called signing. Okay. No, financial statement should be signed, authenticated. Okay. Both the standalone financial statement as well as the consolidated financial statements should be approved by the board of directors by signing. Who should sign? Not all the directors have to sign. Okay. On behalf of the board of directors, the chairperson, if he is there, where there is a chairman of the board, it's called chairperson of the board. That person who is authorized by the board, the chairperson of the board who is authorized by the board alone can sign. So, on behalf of the entire board, chairperson can sign. Or There's an option, or they might ask two directors to sign. But remember, very, very important. This is what you have to remember. This part of it is very, very important. Out of those two directors, one should be MD. So invariably in the problem, they'll give you three directors, one of whom will be MD, other two will be there. The other two fellows will sign. So that the answer is very clear. This MD should sign. Okay. So either the chairperson duly authorized by the board or two directors, out of which one shall be MD. Just remember it, 2 marks. Just like that in your hand. Laddu like that, it will come and fall. Just wait. Okay. Next is Chief Executive Officer, if any. Suppose the company has a CEO, that man has to sign. CFO, that man has to also sign. And of course, our good friend, dear friend, the company secretary also has to sign. Okay. So all of them, all four have to sign. Okay. So remember this, you don't have to mug up, you don't have to study anything. If you now remember what I'm saying, the exam you'll get you may get 2 marks straight away. For that, no need to study. Just remember common sense. Two directors, out of which one shall be MD. That's all. In case of a one-person company, it is sufficient if only one director signs, because a one-person company may have only one director. Though there is no limit on the number. You can have up to 15 for even OPC. Okay, there is no limit. Private, public, OPC, all have upper limit is 15. Okay, lower limit for private company, minimum 2. For public company, minimum 3. Just for information. Just for your information, not in your syllabus. So minimum. Whereas for OPC, it can have even 1. Okay, there's no minimum 1, because nothing less than 1 is possible. One person should sign. But sometimes it may have 2, 3 directors also. Even then, it is enough if one director signs. Okay. See, this is the problem. Altar Limited has on its board 4 directors, W, X, Y, and Z. In addition, the company has Mr. D as the MD. The company also has a full-time company secretary, Mr. Y, is on its rolls. The financial statements of the company were authenticated by 2 of the directors, X and Y, under their signatures. Got the point? Friends, I'm not going to waste your time by answering this question. Okay, the answer is it is not valid, right? I mean, if you want to answer it, answer. You know why? I don't mind seeing your answer, because see, you will get marks based on how you answer, not whether your answer is correct. See, suppose somebody writes not valid. Okay, not valid. Cost, COS, cost. MD should sign. I mean, that's what new Gen Z writing, but may not be acceptable to maybe a Gen X examiner. Okay. Or I doubt if any baby boomer is going to actually go and sign your very good correct. If there is a baby boomer, you're out, because he will expect grammatical sentences. He will expect the structure should be there in the answer, and it will be in a little bit of a problem. Okay. In fact, many times people say we have to study the Gen Z. I agree, because when the workforce is going to increasingly be populated by Gen Z or Gen Alpha, then we need to be very, very clear about what their mindset is. But by the same token, I would say students have to be also study Gen Alpha, Gen X mindset, Gen X or baby boomers like me. You have to seriously understand how our mindset works, because then only you can write answers for which we will give you high marks. Think about it. Okay, if another Gen Z is correcting your paper, you have no problem. But the person correcting your paper will be minimum 1 generation before you or 2 generations before you. So that man's mindset will be different. So try suiting, right? If you can. So that's all I would like to say. What would be your answer in case company is an OPC? In which case it has only one director? No problem. It is enough if. In fact, the answer is here. This line is one answer. Am I correct? This line is one answer. This is one answer. This is one answer. That's all. So I told you, don't need to, just if you remember this, it will be good. Correct. Chairperson is not there, then 2 directors, one of them should be. Therefore, not valid. Correct. Correct. Absolutely correct. So there is no chairperson, therefore don't bother about that. Since there is no, see, even if there's a chairperson, unless the board of directors authorizes him, he cannot sign. So if the board of directors is not authorizing, then chairperson should anyway sign. Along with that, 2 directors should sign. And out of that 2 directors, 1 director should be the MD. Okay. Here, similar, I'm just giving to show you how frequently it is being tested. 2 to 3 marks, not more than that. 2 marks or 3 marks. The board of directors of Vishwakarma Electronics Limited consists of Mr. Ghanshyam, Mr. Haida, and Mr. Inder Singh. The company has also employed a full-time secretary. P&L account and balance sheet were signed by Ghanshyam and Haidar, obviously. Inder Singh should also sign, and the full-time company secretary should also sign. Unless this is done, the authentication is not in accordance with the provisions of Companies Act 2013. Correct? So this is the answer for this question, sorry, for Alter Limited. Right? In case of OPC, should be signed by 1 director and hence authentication is on. Okay? So as I already mentioned to you, the auditor's report shall be attached to every financial statement. Later on, you will see that the board of directors, the board's report also should be attached to every financial statement. A signed copy of every financial statement, including consolidated financial statement, if any, shall be issued, circulated or published along with a copy of notes annexed to or forming part of such financial statement, auditor's report and board's. So this whole packet becomes a sort of annual report. Notice, then board of directors report. Sometimes if it's a listed company, you might find chairman's report is also there for a listed company. Certain listed companies have to provide chairman's report also. And because the chairman is almost like an independent man, he's an independent director actually, and chairman of the board. And he should be an independent director, and he should very clearly guide the company, but he cannot manage the day-to-day affairs. This was the big problem with that so-called HDFC Bank issue, where the powers of the chairman are very, very clearly defined. He is not supposed to get engaged in the day-to-day management of the company. Day-to-day management is to be handled by the CEO or so-called MD or whatever. That is their job and his team. So, but the chairman can monitor and see that things are happening in accordance with the corporate governance, whether in the broader framework, whether the strategic framework is in place, whether this is the direction that this company should take or not, etc. So that was the reason. I don't know, for all you know, given the type of times that we live in, you might even have forgotten HDFC chairman and Mandy had a problem like that. So the memory is so fast. So-called Gen Z and is so, you are into immediacy effect. In fact, you also fall into the fallacy of confirmation bias, we call it, and immediacy bias. That is, when you have data which is available to you immediately, you tend to rely on it rather than take 10 minutes to 15 minutes to do deep research. So, and you'll find that in the times to come, as our whole world is continuously changing, only those people who are able to do deep research and come to analytical conclusions are going to win. Whereas those who are going to be cheated by the immediacy bias given by the media and the social media, so-called, are going to be keeping on doing the same mistakes again and again, worrying, getting confused and all. Whereas those who do deep research and they form their own analytical conclusions can go. For example, in this HDFC matter itself, I'll assure you, when all this was going on, I just went to HDFC balance sheet and I compared 3 years balance sheet of HDFC. And I found that things are going well. Yeah, they are doing extremely well. And they are the biggest private sector, one of the top private sector banks. There's nobody else there. So this company cannot go bad. Yeah, nothing can happen to it. And that share is going at a throwaway price. 740, 730, it's going throwaway price. Fellow who is capable of 1,200 is nothing for him. That was only his all-time high in the recent times. This fellow's future is going to be something totally different. And that fellow is now going at 740 rupees. Better buy. No, but that was a time when generally market was saying don't buy. There's a problem with the chairman. There's a problem with the thing. Immediacy bias. Because that information will go away. But the HDFC price won't stay there. Okay. So, sorry if I'm wasting your time, but think about what I'm saying. Don't take me otherwise. Buddha ho gaya. But still, okay. Buddha is also, we have some role to play in life. Nah? Huh? We have already played. Nah? So, this is not the first time I'm buying a share when the market was saying no. That's what I said, deep research. So don't be misled by what you see in the social media. Preferably do not see social media. If you are going to be a really successful CA student, stop looking at social media. Rather go for AI, go for Gemini, go for anything you go and ask Gemini. Then don't believe Gemini also. Do a little more research with Gemini and then form your own analytical conclusions. Do it 10 times. And then suddenly see how the world changes for you, how everything changes for you. Your opinions may also change. You might be shocked into changing opinion also. You might change, but it's okay. Change is the inevitable thing in this world. Don't be worried and afraid about change. Okay? So my humble suggestion to you, don't mistake me. I know I'm possibly not thing, but sir, good question, Suhairaji, Fatima Begum, excellent point. Do exactly. I'm not trying to boast. See, our institute material is a fantastic resource. But sometimes it can be a little more lengthy for students to remember. That is why what I did in 2020 AD, when Corona was hitting the world, thanks to the institute, I got an opportunity. The institute gave me opportunity to take online classes. God gave me the opportunity to sit at home and prepare these slides. God gave me that opportunity, and he said, Srikanth, this is the time. Sit and study the Companies Act 2013 fully and prepare these slides. So I have completely followed the Institute material only. But I have, wherever possible, made it shorter and sweeter and simpler so that to an extent, yes, you can write what is there in the slides, nothing. You won't have time for that. And you are not going to get more marks by writing more. This is not university exam. They want to the point answers. The people correcting the exams are not having the time to read all sorts of bhashan. This is not university exam. They want answer. See how it is going. If you don't believe me, check the guideline answers. Highest answers given by the institute. To the point. Check. No need to write all that. No need to write. Financial statements are very important part of corporate. Nobody is going to see all that. Straight answer. But at the same time, don't be too bullet also. Some little bit of content, which is more than enough if you take it from the slides and give it. Good question. I hope answered. Okay. So now, yeah. You are correct, Anilji. Data is prepared by human, but except that, the AI gives you a better way of looking at data and forming connections that are not there. Just take it out. Use AI more and try to familiarize with that AI prompting and all that. Improve your prompting skills. Suddenly you will find AI is making connections that you are not able to make so easily. It is taking the human data, but it makes connections that just check it out. Don't believe me. Sometimes you believe me. Don't only ask questions. Just believe me. Go there and use prompting. And suddenly you will find all sorts of new, and then test it. I'm not saying believe directly. I'm not a fool. I don't believe AI. But whatever AI throws up, I test it further. Just use it. That's all I would say. Then we will talk whether AI, human is better. AI is better. It's not about who is better. It's about how can you more effectively use AI and become a better human being. That is all. So according to Rule 8 of the company's accounts rules, the board's report shall be prepared based on the standalone financial statement, not on the CFS. So the board's report is pertaining to the standalone. Okay. Any highlights of performance of subsidiaries, etc., only will be provided in this report. Okay. Now we move on to the next section. So do you notice one more thing? I am not following the section order. you will find that institute material follows section order. There I have made a marked deviation and I'm going by a logical order, which was taught to me by my guru, Professor K.S. Anantharaman. K.S. Anantharaman used to mix sections and teach. That was his greatness. So he understood. So I will do that. So if you are a conventional learner, sir, I will learn only section 1 to section 148, sir, like that, then you read. But this way, what happens now? We cover topics that are related together. So we said 128, 129, 129A. Then I jumped to 134. Why? Because it is talking about authentication of financial statements, right? That is why I'm jumping to 134, right? Now, I'm coming to Board of Directors Report 134.3, which is Directors Report, right? So, I'm coming to 3 after 134, 1, 2, and all that. Okay? 3. Now, this is the content of the Board of Directors Report. I'm going to take you through it very quickly, for want of time. Not important, I would say. When I say not important, I'm not saying don't study it, but I'm saying don't waste your time mugging up all. Just try to remember it if you can. Okay. So basically, the web address, if any, where annual return has been placed, has to be given. The director's responsibility statement has to be given. This is important. The director's responsibility statement part, now you will want to remember it because once or twice it has been tested. Declaration by independent directors as to their independence. Later on, when you come to final, you will find independent directors, there is a test of independence. 6 matters they have to establish. So that if any violation is there, they have to report it. And obviously, they will no longer be independent director. Or else they should give a declaration that they are maintaining their independence, that no transactions have been entered into or no positions have been acquired by them so as to question their independence, right? And any related party transactions, contracts or arrangements had to be disclosed in the format of AOC 2 in the director's report, okay? Of course, while doing this, be very, very careful to correlate with the notes on accounts because in the notes on accounts also, you'll be giving related party transactions. So just see that everything is gelling correctly. That's all. Conservation of energy, technology absorption, foreign exchange generation. All this was very relevant in those days. Not so much, but still you can use this to project your image. Today, we are moving from this conservation of energy, etc., to what is known as ESG, correct? Yeah, ESG, okay? I think that is environment, sustainability. Hey, what is the third word here? Can anybody supply for ESG? Environment, governance. Environment, sustainability, and governance. ESG. Today, Board of Directors reports are more into ESG reporting rather than merely conservation of energy reporting. So ESG reporting itself is very important. It is mandated not in India. Yeah, thank you, Mr. Anil. So great of you. ESG reporting is a specialization area. Some of you will be asking me if at all later on you meet me in advanced MCAs or some other class or some other forum, you will ask, sir, what to specialize in? ESG is an extraordinarily niche specialization where reporting ESG reporting, we call it, not yet mandatory, but matter of time before it is mandated, in which case there's a huge demand for ESG professionals as they are. Because it's basically good old conservation of energy only. Okay. And of course, sustainability, which is slightly going beyond conservation of energy, etc. And you have to mention in the report what are the things that you have done for sustainability and environment and governance. Governance is also very, very important. Corporate governance. See, corporate governance was a big buzzword once upon a time. Today, sort of, it is still spoken, but in a different context. Now it's sort of merged into ESG. It's becoming like governance becomes a part of So governance is more about transparency, stakeholder relationship, how you are interacting with stakeholders, and how you treat them. All that becomes a part of the governance framework. Company's policy on directors' appointment and remuneration. State of company's affairs. Not sorry state, would be a good also, but state of company's affairs. Okay. Now, this is where you'll see when you try to take up some company's director's report. No, it will be comedy where they would have been doing very badly, but the company secretary or some other spin master would have written some statements that are so vague and so vague that nobody will read it. First of all, nobody bothers to read this. Even if they read it, they can't go beyond that spin where they see something like that. But once you know what that means and you go behind those words, you will really understand what this guy is trying to tell you. He's trying to tell you that this company is taking extreme risk and that it's highly leveraged and that there's a very good chance that it will become insolvent. But that the way they will tell you, it will be so totally beautiful that you'll think it's one highly beautifully managed company like that. Okay. Development and implementation of risk management. Okay. Which is very important. Today, another specialization area, just like ESG, another extraordinarily lucrative and very, very niche area is risk management. Business risk, okay, all that. Commercial risk management. So, fantastic area. Number of meetings of board, okay. Details of fraud reported by auditors, if any, okay. And comments by board on later on when we come to auditors, you will see that there is a duty of an auditor to report fraud if he notices it. And once he does it, there we will say it has to be disclosed in the board of directors report. This is where it has to be disclosed. Okay. Comments by the board on remarks made by auditor and company secretary, not the employee, but the practicing CS, PCS, who has conducted secretarial audit, if any. Amounts carrying reserves are paid by way of dividend. This is one important item everybody will read in. In fact, they will open the board of directors report and this is what they'll see first. Have they given me any dividend? First thing. CSR policy. Later on, when we come to CSR, you will find that every company should disclose its CSR policy and initiatives, etc. And any particulars of loans, guarantees, or investments given to companies in the related or whatever it is. And material change affecting on financial position, which could have happened after the balance sheet date, if there is any. Okay. Other matters which I have described. Okay. So this is a very, very not very important from exam point of view, but interesting from a general perspective. Okay. Listed or other public companies having paid up share capital of 25 crore or more shall contain statement indicating the manner in which the format of annual evaluation of the performance of board, its committee, and of individual directors has been made. So, just like any employee is being evaluated for his performance, corporate governance demands that directors who are controlling a huge amounts of money should also have an evaluation. Okay. For that, they have prescribed a threshold of paid up share capital of 25 crores or more. Okay. So, of course, see, this is all great in terms of legal provision. But imagine family-owned business, listed company run by one father and two sons. Other independent directors are there on the board. Now, who's going to evaluate these family directors? How will they evaluate? Who will be able to say what you have done is wrong and still continue in that company? He may be the highest independent director. It may be the ultimate committee that is being formed of only three independent directors. But will the three of them have the ability to say what they are now doing is wrong? So by and large, what they may do is they may water down their advice, but they may put in a mild request. Please don't do like this in future, like that. But still, they may not they will not be able to evaluate. Okay. That is unfortunate reality of corporate governance. India predominates predominantly family-owned businesses. The most famous family-owned business is also the most successful family-owned business. So maybe you got to guess which one I'm talking about, but it is still the most successful family-owned. Is still the most successful, highly rewarding to its shareholders, but still a family-owned business. Okay, and finally, what the family decides the business. Okay? That is the problem. And so what happened? What happened was something totally different. The split in the business actually helped one portion and destroyed the other portion, but that's okay. At least one portion got saved and growing. Where disclosures referred to in the subsection have been included in the financial statement, such disclosures shall be referred to instead of being repeated in the boards. See, where they are also in the notes, that's what I said. Certain things will be in the notes also, can actually refer to rather than repeat it here. If the CSR policy and director's appointment policy is available on the website, don't repeat it here, just give the salient features of the policy and ask them to refer for the details to the web address. Assured that nobody will do it. 100% assured nobody, except research scholars. Okay, when we are doing research, we will do all that. But no member of the company, no future investor, not even analyst will bother to go through all these things. There's a proposal to prescribe an abridged board's report for a OPC. Not yet done. Okay. OPC and small company, not yet done. In case of OPC, the report of directors will attach the financial statement will be a report containing explanations or comments by the board on every qualification reservation. See, OPC need not give such an elaborate report. Because simple. It is not reporting to somebody else. It is reporting to that one man who formed the company. He is running that company. Therefore, there's no need. But still, you have to give, if there is any qualification by the auditor, that has to be answered in the director's. Right. Now, very important, director's responsibility statement. Now, if you can concentrate on what I'm telling and make a note. See, we have two options. One is we can run without a break. I was thinking, no, even I need a break. So what we have to do is we will take a break, but the class will extend for another 15 minutes beyond 8:30 and maybe another 10 minutes beyond 8:30 to compensate for our loss on that day. Okay. On that day, around 8:10, I think I have to close. So that 10 minutes I'll make up in my remaining two classes, depending on my need, okay, of completing the syllabus and giving you a well-rounded awareness of the chapter. Now, director's responsibility statement, important, right to remember. Okay, this is something that is needed because here the directors acknowledge their responsibility. It's quite possible that at the end of the day, a director will come back to you and say, I am not aware. I don't know about all these things. That is why I hired you. Here they know, they cannot say that because here they are reporting positively, affirmatively. Okay, so first, very important, the applicable accounting standards had been followed along with proper explanation. Fantastic. Okay. Also, the directors had selected such accounting policies and applied them consistently and made judgments and estimates that are reasonable and prudent. Okay. So, I mean, seriously, you need to get into audit and articleship and all to see what type of confusions they will try to create for their immediate convenience. Consistency is never a criteria for management because they are entrepreneurs interested in making money. Now, if you ask him, he will say, Mr. Srikanth, I want to be highly ethical. Please let us not do anything that is against the law. That is the outward dialogue that you will get from any MD, any director till date. I've never heard any MD or director tell me, Mr. Srikanth, let us do criminal activities. Let us treat the shareholders. But ultimately, they may be doing things that are prejudicial to the shareholders. They will do it knowingly. At that time, they will want to do all sorts of accounting gimmicks. Okay, it is to protect the shareholders only that you and I are there. Okay, remember that always. We are the only barrier between the directors and the shareholders. I agree. Before Mr. Anil says this, I will tell it. It is difficult for an auditor to be independent. But that is why it becomes a great thing if you are able to be independent. Instead of saying it cannot be done, you should decide it will be done and I will do it. So I'm again and again giving you, I'm projecting to you the image of a chartered accountant who is steadfast, who is capable, who is ethical. So there is another image that others can paint that you don't have to believe it. That chartered accountant doesn't exist. The member of our institute is a highly ethical man. He has the power. Okay, if he doesn't have, he should take that power and then only go to the audit and say, I will not permit this. It is not in my watch, it won't happen like that. Then believe me, once you put your foot down and your reputation grows, believe me, good companies will come to you and they will want you to audit them because they know that your certificate means it is of good quality. That is how reputations are built, not by supporting criminals and people who are not having any ethics. Okay. So the directors have selected such accounting policies and applied them consistently and made judgments and estimates that are reasonable and prudent, so as to give a true and fair view of the state of affairs of the company at the end of the financial year and of the P&L of the company for that period. Okay. The directors have taken proper and sufficient care for the maintenance of adequate accounting records in accordance with the provisions of this Act for safeguarding the assets of the company and for preventing and detecting fraud and other irregularities. I'm not going out of turn here. I will not mention the bank, but I got once for one of my very big clients, I got a call from the bank manager saying, Mr. Srikanth, many unsecured loans are very high. You please give another balance sheet classifying the unsecured loan. Trade creditors are very high. You give another balance sheet classifying the trade creditors as unsecured loans from promoters. Sir, how is it going to happen? What do you want me to do? He said, no, please do it. Because otherwise I cannot renew their loan at the rate that they've asked. Why is that going? Both of you go to hell. It's not going to happen. True and fair view, boss. First of all, it is wrong. Forget true. It is wrong. True and untrue and incorrect. Then I asked him, what will happen if it goes to thing? No, debt to equity is very high. I want to reduce it. He said, hello, Baba, if it goes to unsecured loan also, it's still debt only. When he is telling, no, unsecured loan, if you classify it as promoters, then I can take it as quasi-equity. Sure. So now you know what is the pathetic fate of true and fair view in the hands of these bankers and entrepreneurs. So you have to protect the financial statement and make her clean and keep her clean. It is a difficult task, but not an impossible task. Okay, the directors have prepared the annual accounts on a going concern basis. Okay, going concern. That's again very important. That the company, you know very well, I do not waste your time on going concern. But see, note it, your honors, the directors are actually confirming it here. Tomorrow, if anything happens to the company and it's insolvent, then the shareholders can very well take action against the directors. Okay. For saying that, because of course the auditor also, because you're also saying that it's going concern. And if they state that it is a going concern, we can always qualify and say, no, it is not. Okay. The directors in the case of a listed company had laid down internal financial control. These are not normal internal financial controls. These are internal financial controls to be followed by the company, and that such internal financial controls were adequate and were operating effectively. This is again, later on when we come to auditing, I will show you that many of the provisions of the Companies Act 2013 are learnings from the Satyam fiasco. The ministry and the government had huge learnings from the Satyam fiasco. It wasn't just about the failure of an auditor. It was the failure of a system. It was the failure of a financial system. It was the failure of a whole market. And they realized that this is not just a matter of putting more pressure on the auditors and hitting them. Yes, they did it, but going beyond that, they know that it is also the irresponsibility of the independent directors, the irresponsibility of the owner directors who are supported by the independent directors. So they made it very difficult for owners and independent directors, because this is, once it is signed, it is binding on the entire board. The so-called independent directors also are bound by it. Okay, it is not, see, any violation only they are having immunity. But in this type of statement, definitely action can be taken against them also. Okay, because they are also party to the financial statement, right? The directors that devise proper systems to ensure compliance with the provisions of all applicable laws, and that such systems are adequate and operating effectively. So what all I've highlighted, because every law which is applicable to you should be covered. The best is to do a total study and arrive at what are all the laws impinging on the business of the company, and try to see that these laws are adequately complied with. Okay. So even later on, you'll find that when you come to auditing, in the auditor's report, we are also certifying that it has complied with all applicable laws. So that means in addition to CA, we should also study law and be thorough in law. Not necessary. All that you need to do is, once you take up an audit of a company, study the industry, study the various laws. The basic laws are anyway going to be common for all. Any special law applicable to that industry, you try to take it up and read it. Again, using AI, the human beings only gave, but that human being has given huge mass. So you ask the AI to summarize, see the highlight of what's there, and then go deep into some of the issues and try to read and make your own conclusions about what is what. It's a little bit effort you have to take. Here we are talking about, there we saw signing of authentication of financial statement. Here talking about signing of board's report, self board. The board's report itself. Again, chairperson were authorized by the board, 2 directors, out of which one shall be MD. Okay, here only these people. No need for company CEO, CFO, company secretary and all. Chairperson were authorized by the board can simply sign, or 2 directors, out of which one shall be MD. Okay. Any contravention of 1/3 of this section, you will find company is liable to a fine of 3 lakhs, and every officer of the company who is in default, 50,000 rupees. Now, we are going to talk about the right of the companies or right of the members to receive copies of audited financial statements. Friends, see, you already studied management and administration, I hope, in which case you will know that the notice calling the annual general meeting should be sent to the members at not less than 21 clear days before the meeting. Am I correct? So similarly, the copies of the audited financial statement, consolidated financial statement, audit report, and other documents. Please note it. Sending unaudited financial statements not acceptable. A company that sends unaudited financial statement as good as not sent. It has to be audited. Okay. Should be sent to every member, every trustee for debenture holders, and other persons. In fact, one startup entrepreneur actually asked me this question. So Srikanth, we are in a hurry to comply with the Companies Act. Our company secretary wants to send the financial statements. Can I do so? I said, look here, sir, the audit is not over. Yeah, we are aware of that. You complete your audit later. We will now send the financial statement. With audit report, your financial statement has no value. See, young people, very surprised. And I'm not able to understand. Then I made him sit down and said, look here, Baba, audit is compulsory. Oh, okay. So I was not aware. When I saw the net, I could not, I understood that instead of going to the net, you could have consulted one of us, not necessarily me. Any other member of our institute would have clarified this for you. Why only me? Okay, like that. Then when can you give it like that? Take some time. provide all the information we have called for, provide proper explanations to it, give a true and fair view, present the statement in a manner that is true and fair. Definitely, we will sign off and you can go ahead. So that's okay. So, copies of audited financial statement, consolidated financial statement, audit report, etc., should be sent to every member, every trustee for debenture holders, certain other persons like legal representative, assignee or receiver. Now it won't be there because of insolvency and IPC proceedings. ABBA has so no need for that. But legal representatives who are registered have to be given a copy. So this financial statement has to be sent to every member, etc., not less than 21 days before the meeting. Okay. For Section 8 company, the financial statement should be sent not less than 14 days before the date of annual general meeting. Right? So, Ani has a question. Yeah, I do agree that a break is in order. What I humbly suggest is, I was thinking that I could complete something and then go. Let us do this later. It takes a little time. We can take a break. The time now is about, let's see exactly what's the time now. About, 7:35, let us say. So let's say 7:45. We'll be back by 7:45. Class will extend 10 minutes beyond 8:30. Please be emotionally prepared for it. Sir, a short break, sir, for about 10 minutes. Welcome back from your well-deserved break. In the meantime, I don't see any questions. Now, we now move on to the next slide, which is manner of circulation of financial statements in certain cases. See, my dear friends, this is something that you have studied in management and administration. Just like the notice for an annual general meeting or a general meeting should be sent not less than 21 clear days before the meeting. But it is quite possible that the annual report, the statement may be sent less than 21 days before the date of meeting. Shorter notice. Can the AGM, the notice of AGM or EGM be sent with less than 21, shorter notice? Yes, there is a procedure. Similarly, financial statements also can be sent less than 21 days before the date. Why? Because they have to go together, Baba. See, especially annual general meeting, because along with the AGM notice, you have to send the financial statement. So 21 days. So if you are not able to send the AGM notice, you cannot send the financial statement also. So, which is why, in fact, coming back to that startup company issue now, what they should do is they should go to the registrar of companies and apply for time to hold the AGM within next 3 months, suitable date. Possibly they should consult me as the auditor and ask me, when will you be able to complete? I will tell them, boss, if you give me all this data, this time. Based on that, they should take comfortable 30 days from that because they have to send notice and all that. Take a date from the registrar. It's a correct procedure. Most professionally managed companies which are, see, it is not as if auditors will always complete it well in time. There may be delays due to many reasons. In those cases, you are entitled to take time from the registrar. Instead, you cannot say, you will only circulate the financial statement without the auditor's report. That is not correct. So here they want to send it less than 21 days. Maybe some emergency, something they got. I think it's okay, you can do that. Okay. Copies are sent less than 21 days before the date of meeting. They shall, notwithstanding that fact, even though they have been sent less than 21 days before the meeting, even then, okay, in spite of that, they shall be deemed to have been correctly sent, duly sent, if it is agreed to by the number of members as stated below. So the meeting, what you should do, you should ensure that the members agree. So in the case of a company having share capital by a majority in number entitled to vote, representing not less than 95% in value of paid up capital. So this is possible only for a company where the number of shareholders is fairly finite and controllable. So if Reliance Industries cannot afford to do this, because how to get 95% in value of PUC? So many shareholders. Okay. You can't. The closely held family-owned business, you can. Family-owned company, where shareholders will be essentially family members, you do it. Company not having share capital, members having not less than 95% of the total voting power. So this could be again a question which is asked in the exam. This is not a question asked in the exam. I think so. This is no, it's a question asked in the exam. Now you Chemicals Limited, an unlisted public company, has 200 members. It's paid up share because some of these problems are designed by me. Okay, were written by me, but whereas some are, for example, this is written by me only. This one, Abhiruchi, not yet asked in the exam. I repeated, Your Honor, not yet asked in the exam. Okay. In those days, when my book was there, I remember that in my book, every edition I used to bring about, I will include all the questions asked in the exam up to that date in that book. One of the early movers. Then only other books came, which covered the entire exam questions were covered in the textbook itself. I used to bring everything, and that too I will arrange it topic wise, not even chapter wise, subtopic wise, so on and so forth, and all that. Those days under the old law. New law, not written any book. This is more, I'm so happy to take classes for the Board of Studies, my own institute, and I'm happy and I don't need to write a book. Said that, sometimes I'll also include some my own problems in the book. And one or two have even come in the exam. I'm not joking when I say that. I've got proof also that one or two problems were asked in the exam. Navayug Chemicals Limited, an unlisted public company, not the same, some similar in the changes and all. But the basic concept would be Navayug Chemicals Limited, an unlisted public company, has 200 members. Its paid up share capital is rupees 50 lakhs, consisting of 5 lakh shares of rupees 10 each. The company is proposing to hold its AGM on 28/9/2021. There was delay in submission of accounts for audit. I'm using the words very, very carefully. There was no delay in the audit. There can be no delay in an audit. There was a delay in submission of accounts for audit. And hence, signed financial statements are ready only on 10/9/2021. Okay. The company has obtained the consent of one. So now they have fixed the date of AGM 28/9/2021, but their accounts are not available. So possibly now they are going to get both members' approval for shorter notice for AGM and also sending the financial statements within less than 21 days before the date of the meeting. Correct. Because financial statements are ready only on 10/9/2021, whereas the AGM is to be held on 28/9, which means you don't have 21 clear days, 21 days. So the company has to get the consent. Okay. It has got the consent of, out of 200 members, it has got 160 members who are holding 45 lakh rupees worth of PUC. Okay. Can they proceed to circulate? Let us see if any answers are coming. You can try. If you want, I can show you this also. A majority in number entitled to vote representing not less than 95% in value. Let us see. Only one person has responded. Maybe that is Pawanji was jumping the gun. 90%. So they cannot proceed. 95%. Okay. Good. Fantastic. So happy. See, Mr. Ramachandran is saying no. One word. Because of the non-interactive nature of Zoom chat. But still, in the exam, you have to write it in 4 parts. You have to write it in 4 parts. First part, you should write the facts. Now you can, in brief, don't repeat it, represent it. I'm now teaching you the 4-step process for answering questions in the exam. 4-step. This is a 4-step process. Okay. So basically what you need to do is, first step, you need to represent the facts. Don't write everything. Just one line. Navayug Chemicals has 200 members and a paid up share capital of 50 lakhs. Full stop. It wishes to circulate its financial statement within a period of less than 21 days. Okay, that's all. Because 28/9, 10/9 and all don't have to bother. Okay. So you have written the facts. Now write the law. Okay, even if you do not know the section number, it's okay. According to the Companies Act. Or else, according to section 136 of the Companies Act. Then, as Madam rightly asked, if you just write from here to here, from here to here, without this. Sorry. Don't write this. Not having share capital, don't write. Only this. That's all. This is the answer. Then you write, therefore, even though 160 members being more than 50% have agreed, consent of members holding 45 lakhs only has been obtained, which is less than 90%. Okay. Then conclude. Therefore, they cannot proceed to circulate the financial statement less than 21 days before the meeting. Sir, if you write it the way, or madam, as the case may be, if you write it the way I am suggesting it to you, 4 distinct parts, chances are you will get maximum marks. If for a right answer, you will get very high marks. Even for a wrong answer, you will get 50 to 60% because you would have written the law. It is only when applying the law that you applied it wrongly, either due to inadvertence or otherwise. So you will lose marks. No, you get 50% of the marks. This is my humble suggestion to you. I mean, don't, if you think it's not a good idea, it's perfectly all right. If you won't apply it, please apply it. Correct. See, Mr. Karan Rajesh has written a very nice answer. Correct, correct. So, Mr. Karan Rajesh's answer, Shah's answer is from the Western region. His answer is definitely good answer. That is how it should be written. Excellent, excellent. Okay. So, in the case of a listed company, it is okay if you comply. 137 shall be deemed to comply with if the copies of the documents are made available for inspection at its registered office, and a statement containing the salient features of such documents in the form of AOC 3 as the company may deem fit is sent to every member of the company. And the statement is to be sent not less than 21 days before the date. So in the case of a listed company, you need not circulate. It is enough if it is kept. In fact, today what companies do is the minute it is audited and sent to the annual report goes along with that, they put it in the website also. So today, if you are a shareholder of a company, you need not worry. You can just go to it. It is available on public platforms like moneycontrol.com, NSC website, BSC website, SEBI website, everywhere it will be there. But best is to go to the company's own website. And I always do that. When I'm doing research on a company, I go to the company's website, which is their official. Almost all big blue chip companies which I deal in, which I buy, have their own fantastic. In fact, if a company does not have proper financial statements in a good website, that itself is an indication that it is not worth buying. Believe me, that itself shows that the company is having some transparency issues, that they do not want to disclose financial data. It gives a wrong signal to the investor. And it to a person like me who's an ultimate value investor, I see that as a no-no. Sometimes in a party or in some other meeting, somebody will casually tell me, Mr. Srikanth, you are an investor, blah. Yes, sir. Have you seen Dubaco Limited balance sheet? Have you? It's a good investment, like that, they will say. Then I, out of curiosity, I'll say, what is this company? Let us see. So fellow won't even have a website. Then somehow I'll struggle. I'll go to NSE, SEBI, and I will download that too. 1 year old. Current years will not be there. 1 year old will be there. And it will be first balance sheet. Then I read the newspaper and the website and all sorts of spin will be there about that company. Be very, very careful. No. Sorry. I'm talking about, sir, I think you are missing the point entirely. Again, as usual, you are missing the point. Okay. First question, sir, general answers are not acceptable. We need to use ICAI material suggested answers, right? Not necessarily. Not necessarily. And I do not know what you mean by general answers, but ICAI material content, if you repeat it, it will be good. Friends, this is ICAI content only. This what I have written here is absolutely there in the institute material, except that it is summarized. So you can say this is own answer only, but it is there because ICAI material is only giving the BARAC. So what I did for preparing these slides was I read the BARAC fully. I will read the entire section, take notes. Then I will read the institute material fully, and then I will do an analysis, and then I will summarize it and create diagrams and all that. So I did it. So in a way, I prepared for the law paper completely. Over 4 months, I prepared. It was a fantastic experience in Coimbatore when during the, No, this is coming in all the sheets. Okay, so coming to the point, see, my comments about shares and investment is not meant to in any way suggest that you should do it, but to help you understand how financial statements are relevant for taking investment decisions. So, in a way, my message to each and every one of you is do not take tips even from people like me. You do research on that company and then you take your own informed decision. One. So this is the conclusion. So immediately don't as a tell them. No. Which is why anybody and everybody is able to give you some tips and confuse you. No. If you identify, you decide, you try on your own valuable decision. This is the way I have lived my life. I have not relied on anybody. So that's very nice to know. I'm not in Coimbatore, no, though I do have, I divide my time between Chennai and Coimbatore. I have a small house in Vadavalli where I come and stay. Anyway, so of course, let us see. I don't live there. I go there once in a while when I feel I like going. Okay. So sorry for being very didactic and being very thing, but believe me, at a certain age, a member of this institute cannot afford to be sort of flexible. We have to stand as we at least a certain age. I think 60 is the age for me. I have to stand and I have to be the beacon light for you to see. You are the passing ships. I cannot keep moving with you. I have to stand and show the light so that you will know whether to go or not. So if you want to keep moving around here and there and dashing against the rock, that is your problem. But I have to show you there is a rock there. Don't come. Don't come. And that is my job. Okay. So members have the right to inspect the financial statement, including all that CFS audit report, etc., etc. Okay. But that's what I'm saying. Though there is this provision is there, that a member can actually go to the company and ask for the financial statements and all that. There's no real need to do that because today listed companies put it up on their website. Unlisted company, yes. If you are a member of an unlisted company, you have the right to demand from the company a copy of the financial statement and also inspect the documents at its registered office. Okay. Also, every company having a subsidiary shall provide a copy of separate audited or unaudited statements as the case may be as prepared in respect of each of its subsidiaries to any member of the company who asks for it. See, the future development in this part, this area, and maybe in the next topic is the Ministry of Corporate Affairs will be coming out with a threshold below which companies need not get themselves audited. They may not exempt all small companies because the small company threshold is pretty high, but they may exempt certain companies which are below a certain threshold limit and say, or other criteria. And if any of these criteria is not, all the criteria are satisfied, then they will say no need for you to get audited. You can await such an amendment in the next year. Hopefully you clear the exam before that amendment. Because it is in the wind. Such a proposal is in the wind. And nothing wrong, because believe me when I say that in Singapore and Dubai, there are in England, even in England, there are many US, England, there are many companies that don't have to get themselves audited. So it's not that every company has to be audited. Only in India, we have every company should be audited. Was nothing will happen to our profession because of that. Yeah, don't immediately panic. See, for one, existing companies that are getting themselves audited are itself sufficiently high. The pie is pretty big, growing every day. To those companies that are exempted from Companies Act audit will still need a chartered accountant to advise them on tax. Still need a tax audit. So that is there. Plus, no company they will still need us. The bank still If not compulsory under the Companies Act, get it audited and let fellow sign and take responsibility, because no bank will ever trust a director's signed balance sheet. So they will say, please bring audited balance sheet. And as it is, when these companies grow, it's not as if these companies are not going to grow at all. When they grow, they'll automatically need auditors. So when this section is announced by the Honorable Finance Minister, you're going to see our profession going into a turmoil as if your entire practicing life is gone. Nothing. We have that. In the light of this concept, see, many clients of mine have subsidiaries in Singapore and Dubai and other places. Okay. Now, so where I went, I found that they are not having audit also. There is, what is this? Yeah, in our country, there is no audit for these companies like that, they said. So, okay. Then I thought, hey, then definitely our enlightened Prime Minister and Finance Minister will definitely want to adopt this method in India also. So, it will come. So then I came back and I said, let's look at various thresholds and see how many companies will get out of audit. And we did an analysis and we found that about 30% of our companies that are being audited by us will go. It are all chota, very chota. Fees wise also, it's not going to be a big dent in our income stream. And thereafter, we also found, we went and asked them, was if such a proposal is coming, are you being happy? Already, sir, we won't be auditing, sir. So it's not that I won't be auditing, boss. The government is saying you don't have to get that. No, Mr. Srikanth, you don't go, you be available. Even if government is saying no audit, you please continue to guide us on financial and auditing. Now do you understand the respect that the chartered accountant and auditing profession has? It is not that because the Companies Act says there should be an auditor, a client is coming to you. It is because, like a doctor, you are a financial consultant. You are needed there. And your opinion is valued by the entrepreneur. That is why they are calling you. So don't panic immediately because some proposal is coming. Don't panic. Let them pay. One thing will happen. All these headache fellows will go away. That much is sure. The chota fellows who don't deserve to be running companies, they will go away. And they won't pay fees also when it comes to it. Because they are not serious entrepreneurs. So, inspection of financial statement and all that. And why I'm telling this to you is in the light of a possible. See, today what I'm telling you might think he's taking some nonsense. How is it possible like that? But suddenly 6 months down the line, 9 months down the line, you find new section introduced in the Companies Act like that. Or amendment to the Companies Act. They can even bring it through a rule. They can't. They can't. It has to be an amendment to the. We'll be seeing it in the next session, next topic. It has to be amended, and then only they can exempt. Okay. Let's hope not in the winter session. Manner of circulation of financial statements in certain cases. So, see, today, as I keep telling you, the electronic electronic form is becoming more and more popular among companies. So all listed companies and public companies having a net worth of more than 1 crore rupees and turnover of more than 10 crore rupees. So all listed companies, public companies can send their the financial statements in electronic mode. Okay. Question is, are the shares held in dematerialized form? Answer, yes. Then straight away you can send by electronic mode. See, today financial statements are not sent by electronic mode. They are sent as a link. You press that link, you will get your PDF download if you want. 17 years, almost 1996, 97, yeah, even as early as 2003 and 4 and all, I used to get so many annual reports. And since I had also invested in all sorts of nonsense companies once upon a time, we got so many annual reports, huge papers. I will also keep it safely. I created a whole library of annual reports and all. But then I realized it was a stupid waste of paper. So one fine morning, I threw it all to the waste paper wala and some money that kabaddi wala, and something was realized. And I think we bought some furniture for the office out of that. Waste, better to get it in electronic. Okay. And if it's not held in dematerialized form, then if you get consent in writing from the member, you give it to him in electronic form. Otherwise, you have to dispatch physical copies. But be careful today. Maybe you studied it in share capital and debentures. Compulsory dematerialization for public companies also. It is no longer that is an option. you have to get your shares compulsorily dematerialized. Okay. Punishment for contravention of 136 is you have to penalty of 25,000 for the company and 5,000 for the officer. Again, a very interesting and important provision. Important, I could say. You can see that there's a lot of I have marked it a lot. Friends, question. Financial statements have been prepared and presented to the members, right? Shareholders. Now we are also telling them, please adopt it. Now they keep asking us many questions. And finally, if the company is having a sort of a divided, equally divided groups, one group may refuse to vote or they may vote against. And the remaining votes available are not sufficient for adopting. So it is quite possible that financial statements may not be adopted. So Section 137 has got two subsections. One option is 137.1, where AGM is held. Are you able to understand? These are companies where they hold the AGM properly, send a notice, send the financial statement, etc. In the AGM, the financial statement is adopted. Fantastic. This is the plain vanilla option. Most companies would come under this category only. Okay. Adopted. Okay. Nothing. So in those cases, the financial statement has to be filed within 30 days of the date of AGM. Right, sir? 30 days. Note it, your honors. You have already studied annual report. Okay. So similar to that, financial statement should be filed within 30 days. Okay. Of the AGM. Now, many cases, they will not do it. They won't even know. They will come to us 3 years later. Then we will take up the accounts and completely audit it. And today it is not actually possible because today I am signing using digital signature. And it clearly gives the date on which I have signed. So I cannot predate my sign. Those days, yes, we even predated and signed it. And said, go. Ministry will charge a huge late fee and it will go. But now it is not possible. Earlier years, I cannot sign. Okay. You can't. But let us say that it is delayed also. You pay with some fine and you file it off. Okay. Let us say that auditors got over, but you have not filed, then you have to pay a huge penalty and file it. Okay. So within 30 days of the date of AGM, you have to file it. Okay, sir. The AGM was held, but not adopted. The way I told you, there was a dispute. Some members, see the group that is controlling the company is guilty of or maybe accused of financial mismanagement. Therefore, they are saying the financial statements presented by you are not acceptable. So, and though audited, that's nobody's problem. They are saying we will not adopt. See, nobody can force the members to, adopt. They can not. If the majority is not there, then gone. Then, even though it is not adopted, those unadopted financial statements have to be filed within 30 days of AGM. Registrar takes them as provisional in their records. Friends, please note, these are audited financial statements, but unadopted. What could have happened is, there could have been an AGM. In that AGM, huge fight. Then the other members say, look here, if you do not change it, if you do not correctly prepare it, we won't pass it. So it goes back to the audit, it goes. Then they say, let us have an adjourned meeting when we will look at it again. In the meantime, the original meeting, within 30 days of that original meeting, you have to file your provisional statements. Then maybe at an adjourned AGM, it is adopted. Then that finally adopted should be filed within 30 days of the said meeting. Adjourned. So this is the provision for Suppose they are not adopted, that's a different story. Believe me, in this case, where it is not adopted and stuff like that, the registrar will be very, very keen on calling you for an inspection, asking what is happening and all that. The worst is the next one, where the AGM itself is not held. The AGM is not held. Even then, they say you have to file the prescribed documents. Just because AGM is not held, you cannot avoid filing the financial statements. Along with that, you have to give a statement of facts and reasons for not holding AGM. And then again, I repeat, in all these cases, these are not unaudited accounts. They are audited, unadopted accounts. Or audited, but AGM itself not held case. So you have to give the reasons for not holding AGM and file with the ROC. Within 30 days of the last date before which the AGM ought to have been or should have been held. Okay, it's a very interesting provision. It is also a kind of a safeguard provision so that no company can come back and say, look here, nobody told me that I have to file it. If you don't, even if you are not adopted, file it. Even if you are not held the AGM, file it. This is what they are saying. If you don't file it, there is definitely a thing. Sir, why are you always asking questions like this, Mr. Anil? See, I explained to you the story now. They may not have anything to do with the audit. First of all, where is the insult? See, you audited and gave. They are not adopting. In what way you are insulted? I mean, try to tone down your emotions. Try, especially while asking questions. So we should all become very matured professionals. Passing the exam is A. Becoming a matured professional is B. The target is to become B, not even after passing. The way we communicate, the way we raise the query should be extremely polite. Don't do this. There's no insult to that, sir. This is a problem for the management, not for you as an auditor, unless there is anything wrong with your audit or if the auditor has colluded with the management, then that auditor should be insulted. See, to answer your question, there are two cases. One, straightforward auditor. He did everything correctly. He has presented the accounts. The other group is rowdy group. They are not willing to adopt it. That is the problem for the management to handle that. Okay, as an auditor, we are not bothered. Second example, where the group which is managing the company is a fraud group, where the auditor is colluding with that fellow, then such an auditor needs to be insulted. Don't worry about that. Such an insult is not an insult to the profession. It is an insult to that criminal who has to be insulted, who has possibly, so MCA will take action against him also. Don't worry about that. All that will follow. But if the auditor has followed the process correctly, has got the documentation, why should he bother? In fact, if at all any word is told about the auditor which is wrong, if a suit can be filed for defamation against those person who told it. If it was done with the witnesses in public, then suit for defamation can proceed. See, this is the power with which we should talk. Okay? See, nobody can prevent a person from insulting you. The real question is, how prepared are you for that insult? Can you handle it? Can you take him to court and strip him? Then you need not be worried. If you have colluded, then what right have you to say that he has insulted you? He has rightly accused you of a crime. So that crime having been committed by us, that gentleman who is a member should be punished. So see how logically we have analyzed your question. Think logically, stop reacting, think logically. There can only be two cases. So are you supporting the fraudulent auditor? No. If the auditor is straightforward, because all the documentation is there, why should he worry? That's all. Your questions are answered. Think like that. Good job. But while asking questions also, ask questions with a lot of, after analysis, you ask the question. It will be a great favor to all of us here. Okay? Don't worry about it. Okay? So the analysis that I did, you try to apply, and then you won't ask many of these questions itself. This is the good example of unadopted accounts. And this is a very neutral example where the auditor has nothing to do with it. Okay. See, the government of India is holding 51% of the paid up equity share capital of Sun Limited. The audited financial statements of Sun Limited for the year 2021 were placed at its AGM on 31st August 21. However, pending the comments of the C&AG. See, so you later on, you might see government auditor audit when we come to auditing. There you will find that in addition, for a government company, in addition to the audit conducted by the statutory auditor, the CAG will conduct a special audit and may come out with comments, usually none. But so sometimes the CAG takes time for that. Therefore, what has happened is the audit is completed, but the CAG has not given his comments. In the meantime, the AGM was held and the accounts were placed. See, this is a typical problem in government. See, there are at least 3 departments that now have to interact with each other because the Ministry of Corporate Affairs, 3 ministries, the concerned ministry of that industry to which this company belongs, and the CAG. 3 people have to communicate. And finally, approval will be given by the concerned Ministry of Finance also has to give. And the Ministry of Finance will come, they will give approval. All that sort of thing will happen. And finally, they'll say, you go ahead with the AGM. Don't delay the AGM. Hold it on the appointed date. But in the meantime, you don't adopt it. You wait for the CAG and things will go on. And then there will be an adjourned meeting. So it was then on that meeting, the accounts without adopting the accounts, the meeting was adjourned without adoption. On receipt of the CAG comments on the accounts, the adjourned AGM was held on 15th October 2021, wherein the accounts were adopted. So here, no problem with the auditor. Don't worry, no insult to the auditor here. This is a bureaucratic problem that they are having. Thereafter, Sun Limited filed its financial statements relevant to the financial year 2021 with the registrar in 12th November 2021. Whether Sun Limited has complied with the statutory requirement regarding filing of accounts. Your valuable comments are welcome. Correct. So now the question is, which section will apply? Which subsection will apply? I don't know how 137.2 will apply. Shouldn't it be 137.1, where they held the AGM, the accounts were not adopted. Therefore, the provisional accounts should have been filed within 30 days from the date of the original meeting on 31st August, 30 days from that date. They have filed it on 12th November, which is 30 days from 15th October. That is not correct. So, I don't know how Mr. Sridhar says 137.2. Maybe you might have to relook at it. File within 30 days of AGM to register, take it as provisional, and later on at adopted, you file it under that section. And again, okay, within 30 days of the said meeting. Okay. So this is the point. Okay, good. So this was the question asked in the examination. I'm just sharing it with you for your ready reference. This is how I used to teach in my classes in those days and my book also. The idea is a student, when he prepares, should also prepare the relevant questions from the exam point of view. So that one shot you should not have to run from here to there, that to here. Straight away finish everything. And so that see its ugly face in the exam, you know the answer, write it and go. And use the time for some other question where you may need more time to write or think. Okay. This is another wonderful initiative by the ministry, which is about, it's now, some of you may be feeling it is 8:30, like that, 2 minutes to 8:30. Don't worry, another 10 minutes of your valuable time and then we will close. Okay. As I already mentioned, just to make up, because next class I may not be able to completely analyze it, take this 10 minutes extra. Okay. So, there is some, see, this is not important from any perspective. Only company secretaries enjoy because they get that additional work for uploading XBRL, statements. Okay. Anyway, maybe now with AI, this may become very relevant. The idea is there is a coding technique by which the financial statements are converted into XBRL, which is a kind of machine sensitive coding, so that when search engines are searching now, they will be able to directly take out financial information from the financial statement itself. Like, that is the idea. So there is an XBRL code and all. It used to be very popular at that time. All companies that it used to enjoy. Even now, there's something called XBRL filing, extensible business reporting language, like that. It's just a code, so that certain codes are there. So that, for example, if you are a research scholar and you want to do research of, say, cement industry, and you want certain important data for cement industry, you can write a program in XBRL by which you can pick up from all the cement companies' balance sheet and all that. I don't know. It's what they say. So anyway, it is a statutory requirement. The companies which are satisfying these criteria should file their financial statements in XBRL format also. Okay. That is the whole thing. So which are obviously all listed companies have to do it, and their Indian subsidiaries. Companies having a paid up capital of 5 crore or more or above, or, so that or is very important, because even if one criteria is satisfied, you are fine. Even if one criteria is satisfied, or is very important. That's why here I had highlighted and. Somewhere I had highlighted and. Maybe I'll. And is also very important. And is there, both conditions are to be satisfied. Both conditions are to be satisfied. Or is there, even if one condition is satisfied, it will be, there will be a line. So companies having paid up capital of 5 crores or more, companies having turnover of 100 crores or more or above, all companies which are required to prepare their financial statements in accordance with Indian accounting standards. So there's a separate group of companies who are liable to file under Indian accounting standards. They will also automatically come. See, this turnover of 100 crores is very easily breached by many of our auditees. I have found that 100 crores is a magic number. In fact, sometimes when I meet them very casually for a post-audit meeting, I tell the MD, boss, you are 85 crores now. Come on, reach the magic number. That's what I will say, and I'll go away. Next year, they will come to me and say, Sashikant, thanks to your blessings, we have reached 100 crore. Very good. Now go on, file XBRL also. That's okay. So increasing only means more burden for you. Like, they will laugh, because it is a problem of plenty. When you earn more, you can afford to be more compliant. Anyway, for a OPC, the financial statement should be filed within 180 days from the closure of the financial year. So, very lenient for an OPC. 180 days is given for filing of the financial statements. Copy of financial statement to be filed with registrar. So if a company is having subsidiaries, okay, now this is where you should remember my point about many countries, Japan, you name the country, there are clearly cases or classes of companies that are need not be audited. So a company may have subsidiaries abroad which are unaudited in the country of origin. In which case, for those subsidiaries, you have to file in India in the format similar to the Schedule 3 format. In case this financial statement is not in English, it can be filed along with the translated copy. So I used to audit an Indian company, but majority stakeholder Japanese. We also had a Japanese subsidiary. In fact, even that Indian company ka balance sheet, now it will come in Japanese. Because two versions will be there. Because before the Japanese sign it, they can't read English. So they will read it in Japanese, and then they will sign Japanese also. I won't sign the Japanese. Maybe they will sign it and send it abroad for the Indian company, wherein it's a wholly one subsidiary of the Japanese company. I will sign only the in the Indian English part. They will also have I will be seeing what is that. I'll say, sir, that is Japanese translation, sir. They can't read English like that. Then, when there is a subsidiary for that subsidiary, we have to consolidate. That will come in Japanese. So that also has to be filed. So it has to be filed with a translated copy. All that they have translator. There will be one gentleman will be a translator. When it comes to me, it will come only in translation. But sometimes the Japanese also will be there in see, but nothing will. It's all pictograms. Nothing will be clear. Okay, that's a totally different story. How the Japanese cannot actually understand very complicated English. See, the type of English that I am speaking, slightly more complicated and, very grammatical and using words of more than 3 or 4 syllables, they cannot understand because these words, with our Shashi Tharoor and all, if he writes to a Japanese gentleman, that Japanese will not even understand what Shashi Tharoor is telling. Simple, because when you take a word with more than 1 syllable, the Japanese translation will be in pictograms. So that gentleman won't understand. So if you're going to write a mail to a Japanese, always use single syllable words or simple words rather than complex words. Automatically, it will translate correctly into Japanese. I discovered this when suddenly, my mail, the gentleman replied saying, excellent mail, thank you for the clear mail. I said, how did it happen? Then the translator said, sir, you used very simple language. It got correctly translated into Japanese. Anyway, contravention of this particular section, this section 137 is a backbone breaker for many companies. It's only a fine of 10,000 rupees, but continuing failure, 100 rupees for each day, up to 2 lakhs, okay, for the company. And for the officers also, 10,000 rupees. And in case of continuing failure, 100 rupees for each day after the point here is, imagine the company is coming to us. 3 years, they have not filed their annual return, financial statement and annual report. You have to also take annual report. They are also continuing. So when we do the complete tally and tell them, sir, this is the financial statement, this is the amount you have to pay, they'll faint. So we don't want to revive the company, they'll run away. Now they are giving them an amnesty scheme, I think. There's a new amnesty scheme that has come. Okay. Maybe in management and administration, you might have studied that. There's a new amnesty scheme which is come, by which they are allowed to pay a nominal amount and go away. Now, we will do reopening 130. It's an interesting topic. Reopening of accounts on courts or tribunals orders, very peculiarly 2013 flavor. Such a provision was never there in the past. Once audited. It cannot be revisited again. Now, okay, in those days, normally the accounts of a company shall not be reopened, revised, or recast once it is laid at an AGM and approved by members. But reopening is now possible under the provisions of this section. Okay, but for that you have to establish that order of reopening shall not be made in respect of reopening of books relating to period earlier than 8 financial years immediately preceding the current financial year. Where a direction has been kept by the CG for keeping books for a period longer than 8 years. Where there is an investigation, then beyond. Otherwise, you cannot reopen beyond 8 years. Okay. Now, this particular thing, I'll just, 1 second, give me 1 minute. We'll finish this and then stop. With this, we will stop. With this, we will stop. Okay, later on, I'll tell you what is the Tech Phoenix, but I know that for you. See, this entire section is, this whole reopening thing is thanks to Satyam. Because when Satyam scam happened, accounts are already audited and adopted. But there was a mistake in that account. Are you able to understand? The turnover was wrongly stated, the fixed deposits wrong, everything is wrongly stated. Entire, that's what our past president, late T.N. Manoharan, used to tell jocularly in meetings that in the balance sheet of Satyam, okay, on the asset side, so usually asset side is on the right and liability side is on the left. So he used to say asset side, nothing was left. Okay, on the liability side, nothing was right. So jocularly he'll say. So that everything need to be, but there was no provision in the law for that. I'm sure the special GO was passed only for Satyam, but now they made it part of the app. So they say, where any of these authorities, central government, SEBI, income tax, statutory or regulatory body, any other person concerned, any other person who is showing that he is concerned, okay, an investor association, whatever, when they make an application to the court or tribunal, that court or tribunal go into the matter and then say the court will only conclude that the relevant earlier accounts were prepared in a fraudulent manner. or that the affairs of the company were mismanaged, casting a doubt on reliability of accounts. So immediately the notice will be served to the applicants and other concerned, and finally take from the company and finally pass an order for revising and recasting the accounts. So they are using both the words, revising and recasting. See, I'm not able to understand recasting because how can there be a mistake in the totaling? I think it's more about revising, okay, changing numbers, passing journal entries to make it near. This is mainly on account of something, right, sir? So now let us look at when we come to NFR, see, basically these people, the central government or ITA and all, showing that the accounts were prepared in a fraudulent manner. So to the extent of the fraudulent manner, the accounts are to be revised. The accounts are to be shown the correct way. So, or where the affairs, see, this is clearly Satyam. Both these are Satyam. The Satyam accounts were prepared in a fraudulent manner. In the affairs were mismanaged by Mr. Ramalingaraj, casting a doubt on reliability of accounts. So, but of course, after that, I don't know if this was ever invoked, whether anybody went to ask for revising, but it is not there. Later on in the next class, I will talk about voluntary revision. Voluntary revision is different. This is not voluntary. The company is not doing it. Some other authority is filing a to get it done. In the case, the income tax authorities in the current financial year observed during the assessment proceedings a need to reopen the accounts of Chetan Limited for the financial year 2013-14, and therefore filed an application to issue order for reopening of accounts and recasting the financial statement. Examine the validity of the application. Okay. 23-24. Okay, 13-14. That is the problem here. There is nothing basically wrong with the application. Income tax authorities are entitled to make an application under this section, but only up to 8 financial years. Before 8 financial years, they cannot go. It is earlier than. So that's all. See, the real secret here is not, they're not asking you to write the whole thing. They just want you to observe that this is beyond. So you just have to write, central income tax authorities can make an application under section 130, but as the application is made for a year which is more than 8 years before the date, it cannot be done. So, fantastic. Correct. See, this is not penalty. Yeah, a lot of penalties are also there. This is a genuine problem that the government had in Satyam. See, they wanted to recast and revise the accounts, which are wrong. They had no provision in the law for that. Today, there is a provision in the law. That's all. This immediately we need not react to this. It's actually good only. It is good only. Okay. Again and again, I will tell the same reply that I gave to Mr. Anil only. If you are a sincere and straightforward auditor, you need not worry about these provisions. On the other hand, a fraudulent auditor, there is no point in having any provision because he will continue to create only fraud. So, only solution is we as a profession should go above all this and be so straightforward and honest that nobody can find this section should never be ever invoked in future. Then it's a pride to the institute. Okay. Think like, see, becoming negative, becoming cynical, easy. Being positive, even at the age of 60, I'm positive. Being always, accepting that life is good, it's difficult. The choice is always yours, my dear friends. On that note, I'll conclude this. If you want to know what is the fraud, then you should read the book Phoenix, written by our past president, C.A.T. Manoharan, and another great chartered accountant, Mr. C.A.V. Pattabhiram of Chennai. Both are great, brilliant. One is a journalist, and the other is a brilliant, of course, late no more. T.N. Manoharan was grabbed away from us by death, but one of the greatest persons I've ever known in my life. He has written a book. So if you want to know more, don't ask me, Mr. Anil. You buy that book and read it. It is called Tech Phoenix. It is called Tech Phoenix. Wonderful book. Read it. Okay. Thank you. And a time limit for 8 years government maintained books. Time limit of 8 years government maintained books for company. Sir, Company only will maintain the books, sir. If you remember, books have to be preserved for 8 financial years now. So obviously, when books itself will be destroyed 8 financial years, how can we go and revise it? So they say beyond years, go. So government has nothing to do with it. In some cases, the government may come for an investigation, in which case they might say, do not destroy anything. That 8 financial year rule they will remove. In which case, for the period for which the books are there, you can take it out, is the point. So thank you very much for your patient support and going beyond the time limit. It's not exactly, we lost some time that we are making it up here. So let's look forward to completing this topic on, inshallah, on 27th of this month. Till then, see you. Bye. Sir, class over, sir. Thank you, sir. Yeah, over, sir. Good night, sir.